Hello, chart watchers, and welcome to Market Watchers Live with Erin Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site till the next show begins, so you have roughly 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Erin will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right-hand portion of your screen, you'll see a How'd We Do section with a link to a one-question survey, so it's very brief. We'd love to know what you think of Market Watchers Live, and also give us some suggestions to how we can improve the show going forward. We'd love to hear that as well. For those of you joining us for the first time today, welcome to the show. We are glad that you've decided to be with us, and for our regulars, welcome back. Well, it is the start of a new week, and I do want to make a couple of quick announcements. First off, Chart Watchers, the newsletter that goes out twice a month, was released this weekend. That was the first one of December. Thought that was a really interesting newsletter. So make sure you go into the website. You can click on blogs and scroll down to get through some of the articles. But an easier way is simply look at the right-hand side of that blogs page, and there's an area where you can subscribe to the Chart Watchers newsletter. I would highly recommend that. It is free. You just simply provide your email address, and it'll be sent to you as soon as it's published. Again, that's the first and third weekends of each month. Tushar Shande will join Market Watchers Live on Wednesday. We have been talking about this for the past week. We're really excited to have Tushar join us, so make sure you have that marked on your calendar. This Friday, Erin Swinlin will be providing all of us an in-depth look into the DP trend models. So you won't want to miss that on Friday. So mark your calendar for that as well. And with that, I will bring Erin in. How are you doing this morning, Erin?
I'm doing quite well. How are you?
I am doing really well. I tell you what, it has been a crazy market recently. We had a lot of back and forth on Friday, a lot of selling in the first half of the day, and then saw a huge recovery. At one point, we had the Dow Jones on Friday down over 350 points and came back and only closed down about 40. So I think it just shows you how resilient this bull market is. And each time we get a pullback, it's really more of an opportunity than it is a gateway to more selling. Although NASDAQ has definitely fallen upon some harder times. And we'll get into all that in a little bit. But how'd everything go over the weekend? I mean, you had your USC one.
I know. I was very happy to see that. We're going to go to the Cotton Bowl. I'm checking my schedule. I'm trying to figure out if I'm going to fly out to Arlington and cheer them on. But I might end up doing it just from my couch. I'm getting too old for all that travel. So
it's cheaper. It's cheaper from your couch.
Exactly. I have to say today is probably another one of those news noise kind of days.
Yeah, we talk about that a lot, and that's really the key to following the charts is really to tune out the noise. I mean, I know if you're sitting there watching CNBC nonstop, it's just, this constant chatter about how bad this is or how bad that is, and really you just want to continue to follow the charts. And unless we see some serious technical breakdowns, I would ignore a lot of that noise, and I think that was a perfect example of it on Friday. Mm-hmm. But anyhow, I know we got a lot going on, and we got a guest later with John Hopkins coming in, so I'm going to let you take over, go through the agenda, and we'll get into that first market update.
All right, here we go. So market updates, we'll do the first one in just a little while and at the top of the next hour. Talking technically, we have obviously some interesting information to talk to you about this bifurcated market. Monday setups, I know that Tom's been gathering his and I've been gathering mine. I'm always curious if we end up with any overlap, so we'll have to see if we have any overlap today. Earnings spotlight, John Hopkins, as Tom said, will be coming in to give us his take on some of the latest earnings. and 10 and 10 to 1. That's where we're going to take your symbol requests from the chat box, Twitter, and email. And we will give them to Tom, and hopefully he will be able to annotate them in 10 minutes. First one is going to be Visa. And this came to us via Twitter this morning. Finally, I'll be giving you a decision point report, getting you up to date on what all of the trend models are saying, all of our indicators, and give you a look at the decision point view of the big four, as we call it, dollar, oil, gold, and bonds. So you want to stick around for that as well. And before I get to the market update, I did want to point out that, if I can get through here, we did have our Twitter survey on Friday, and we asked everybody, as we ask each other, will the market close higher, lower, or mostly unchanged next week? Well, it seems to be a pretty split between higher and lower. And I think, Tom, you went with neutral, and I went with higher. So we'll see how that ends up coming together. But I did want to show you very quickly the Wall Street Sentiment Survey results of what everybody has said to everybody. So let me just go over there very quickly. And let's see here. I know I had it all the way up, and now I don't have it right there. Here we go. Sentiment indicators. And I wanted to show you, yes, the Wall Street Weekly. This is the poll that Tom and I take and other market timers will take. And then we see how we stack up against everybody else. But it's just the question of what's going to happen this upcoming week. So let me get this back to, I thought I had this all set up and I erased it off of my computer. Okay, so as you can see, at this point, the numbers aren't written in here. You can't see them, but it's we had 42% were bearish, and we had 42% bullish, 47% came in as bearish, so bullish. So it's 42 bulls, 47% bears. And I thought that was interesting because when we did look at that Twitter survey result, there you go. We ended up with a very similar reaction, even though we only had about 30 votes. So I always find that to be interesting. I wanted to share that with you. And now I'm going to get into our first market update. And I'm going to start with our candle glance. Really interesting markets, as we were saying. And I do think we have to be careful of news noise today as well, because we got that really giant move, gap up. And it looked like the Dow was just on a tear. We were going to just start really going crazy based on political news, the tax plan. So interestingly, though, of course, we hit an intraday high, and now we're starting to consolidate and pull back a bit. The NASDAQ, it opened higher, but has just fallen apart. It does look like it wants to, it has pulled back some of those losses from earlier this morning, but we're still seeing the NASDAQ down right now, 2088. So Russell 2000, a nice boom in the morning, but as with the other markets starting to cool down, but still on the plus side right now for the Russell 2000. Treasury yields up slightly at 23.92. UUP, the dollar, we saw a big gap up, but now it is consolidating sideways. Similar look for commodities with a gap down and moving sideways. And as you can see, USO, the same thing, although we're getting a little bit of a rounded bottom here. So it'll be interesting if it can get above that gap resistance that has formed now. Gold is lower, gap down again, but also moving sideways. VIX is reading lower today, just under 11, 1059 currently. And we can see advances are leading declines at this time. Go take you to our market summary. Just looking at this picture right here, we can see NASDAQ and NASDAQ 100 are the only two in the red right now from the major indexes that are covered here. So that should tell you something. We definitely are seeing some weakness in technology. And we've been talking a lot about sector rotation and where the money must be rotating to, because the markets are still not really being hurt too much. So looking at the sector spiders right now, financial, materials, both having a great day with financial ETF, XLF up over 2% right now. Technology, of course, the laggard down almost 1% for XLK, and utilities also laggards with healthcare. All three of those are down. And we can see as far as U.S. industries go, retailers, banks, airlines are leading the way with, again, technology all in the bottom of the list. Not a surprise. India is really, the India ETF INP is having a great day, up over 5.25%. But when we go and look at the laggards here, Japan, Switzerland are both down, with Japan down almost 0.5% for EWJ. And with that, I'm going to pass it back to you, Tom, and let's talk technically.
All right. Well, there's a lot to talk about. I'm not sure exactly if I can get through everything. A lot of stuff going on. And of course, we have our Monday setups coming up. So we want to make sure that we leave some time for that, because that's going to be very interesting with everything taking place in the various sectors and the bifurcation that you mentioned earlier. You can see that between the Dow and the Dow and the NASDAQ, just looking at the chart here. And a lot of that's because technology, NASDAQ's very heavy tech laden index, and the technology shares have really struggled since printing that negative divergence and reversing lower last week. And so I wouldn't be surprised to see a little bit more of, that lagging from the technology area. So it's going to make it a little tougher for the NASDAQ. But I thought I'd go over a couple of things first. First, I'm going to pull up the 10-year Treasury yield. I always like to start here with what's going on in the bond market. We only had one report out today, one economic report. October factory orders were released this morning at 10 a.m., and they showed that they went down 0.1%. But the market was actually looking for a little bit more of a slowdown, minus 0.4%. So the news actually was a little bit more, was hotter, a little bit more bullish from a economic standpoint. And currently we do see that the 10-year Treasury yield is up about 3 basis points to 2.39%. So there's a little bit of selling taking place in the Treasuries. And of course, that is money that sometimes is newfound money for the stock market. And so I think that's helping to spur interest in a number of areas, including the financials and so forth. But as we go through here, I'm going to pull up a couple of these charts. Maybe for those of you who haven't followed the show, let me pull this up, make sure everybody can see the screen, the whole screen there. But the XLF, back at the end of October, you could see higher prices, lower MACD, negative divergence, and you saw the subsequent weakness. If we went back to July and August, higher prices, lower MACD, subsequent weakness. But notice the overall trend remains up. It's just the rotation that we saw with the XLF after we saw a little bit of the slowing price momentum. Look at the industrial ETF, XLI, same thing. Higher prices, lower MACD, struggled for a while. Then you get up here in October, higher prices, lower MACD, we struggle for a while. But now we've got momentum continually surging here to the upside in both of these groups. And I could even throw in the materials, XLB. Check this out. Here at the end of October, higher prices, lower MACD. We struggle all the way back down to that 50-day moving average, get close to a MACD centerline reset. I talked a lot on Friday about the MACDs and how I look at it. And since then, we've seen a breakout, and now we're getting accelerating momentum in materials. We take a look at the consumer discretionary, the XLY. Look at this move to the upside. And I can tell you in one word why we're seeing a lot of this, and that is retail. XRT, Erin, you mentioned this during the first update, having another great day. Look at this move in retail over the past 2 or 3 weeks. This is not just a counter trend bounce or something. This is a breakout, and a lot of money coming into retail on this breakout. So I expect that this is going to continue for quite some time. We'll have pullbacks along the way, but I think this looks really good. Okay, so what's the problem with technology? Well, we just went through negative divergences on all the other areas. Look at technology on the most recent high. Higher prices, lower MACD, and now we're seeing that rotation out of technology. We haven't gotten a 50-day test yet. We haven't seen the MACD get back to the center line or close to it. That's why I think we could see this continue for a period of time in the near term. It's getting very frustrating if you own some of those high flyers that were really moving, like the semiconductors. The other thing I saw that you pointed out, Erin, is that semiconductors were the lowest or the worst performing industry group on the list today. So if you pull up that group, you will see that we are finally getting a 50-day test here after higher prices and a lower MACD, negative divergence. So we went a few months riding high above that 20-day moving average, but once we got that sign of slowing price momentum and we lost the breakout level, lost the 20-day, it's been a quick trip down to the 50-day moving average. Now, I actually have some hope here for the semiconductors, and I think it's setting up perhaps some nice short-term trades. And my setup today is going to be in this space because we have seen such a big move down to the downside. It's a little risky because obviously this is the group that's taking it on the chin right now, but I wouldn't be surprised to see maybe some of these semiconductors at least bounce in the near term. So let's see what else we have today. Well, CVS announced that they're going to acquire Aetna for $69 billion or $207 per share in cash and stock. And if I pull up Aetna, and this was your setup back here, remember, on that breakout. Yeah.
Yeah, right before the big bounce. I looked really smart.
Yeah, well, because you are smart. You use technical analysis. That's
exactly.
What we do.
It makes you smarter.
Yeah, AET pulled back at that rising 20-day moving average, continued to move higher. We did have, this huge move up toward the end of last week on very heavy volume and a reversal. Now the news comes out, the stock gaps up a little bit, now starting to sell off. So we had all the rumor, leading to perhaps this move to the upside. Now the news actually hits this morning, and we see this red filled candle. So it could be a buy on rumor, sell on news kind of event. If you're wondering why the stock isn't trading for $207 because that was the announced buyout, keep in mind that this is not a firm cash offer. Normally what you see is when you get a cash offer for $207, a lot of times the stock would go immediately up to 207 unless there's some suspicion maybe that the trade or the deal won't go through. In this case, it's based on both cash and stock. So depending on CVS's stock, there's a little bit of maybe a question here in terms of what may go on with CVS. And there could be still that variable on whether or not the deal actually does get approved and go through. It's an awfully big deal, $69 billion deal. So we'll have to watch and see there. One thing I like about today's action, and I didn't like so much about Friday, is the German DAX, which is one of the most positively correlated indices around the globe with the S&P 500, had been really struggling here and closed for the first time in almost 3 months below its 50-day moving average on Friday. But when I looked earlier, the DAX was back up about 1.5% today. So even though we went back down and challenged this recent low from a couple of weeks ago, we were bouncing back up today, and I think that's a good thing. I don't really want to see the DAX moving back down below, say, 12.8, because, again, there's a pretty tight correlation. It doesn't mean that the two go hand in hand to the upside and the downside. But if you look over time, there is a very strong positive correlation between the German market and the U.S. market. So that's something to keep an eye on to see if we continue to bounce in Germany. If we do, I think that would be bullish for the S&P. If we don't and we see Germany break down, I think that could lead to a little bit of selling in the U.S., a little bit more than maybe what we're used to in recent months. So that's something to keep an eye on and watch. A couple of other things I think that are really interesting today. First of all, the XLY XLP ratio. I wrote about this in my blog this morning, but it is continuing to move up. And some might say, and I've gotten this question before, am I concerned when the S&P 500 makes a breakout? Excuse me, but we don't see that corresponding breakout in the XLY XLP because we haven't taken out the November high. For me, it's just about whether or not this relationship remains in a bullish pattern. So the XLY XLP doesn't necessarily, for me, have to break out every time we see a breakout on the S&P. But what I don't want to see is a huge move down in this ratio as the S&P 500 keeps moving up. So I think we had a huge run here. And right now I just see sideways consolidation, maybe a triangle of some sort. So I think that this relationship is still in a very bullish pattern. The other thing I think is interesting is that I try to follow the relationship between the transports and utilities. And when you look at this, check out the last couple of weeks, this move in transports relative to the utilities, and it's trying to make a pretty significant breakout for 2017. I think that also bodes very well for the stock market. I think that's telling us that this move to the upside is very sustainable, and that's what I like to look at when the market's going up. I want to see that money is rotating into areas that tend to indicate that the rally will continue, with pullbacks along the way, of course. But right now, this is pointing very bullish for me as well. Just a couple more things. I wanted to mention a couple of individual stocks. One is MZOR. I had not really paid much attention to MAUR Robotics, but there was a story out that their CEO is being questioned over insider trading. And I actually like this chart. So this pullback, and actually earlier today, it got down as low as 53.38. It's all the way back up to 50, what was that, 56 and change.
Mm-hmm.
So pretty nice reversal. Look at the volume coming in on the stock, though. So we could be getting a nice kick save here right on the 50-day moving average. I think this is one that looks kind of interesting. VRX, which is Valiant Pharmaceuticals. I know this is a very heavily traded pharma that many traders like to get on board. And VRX announced today that they're launching a $1 billion offering of unsecured secure note or senior notes. And it looks to me like it's just a refinance because they're pushing back some. They're going to use the proceeds to repurchase notes that were due in 2020. And these notes are going to be due in 2025. So I think it's just giving them more and more time. Market liked it, but check out the key resistance that VRX now needs to get through. So this is not the time I would be jumping in just because we have big overhead resistance. But volume has been returning during this uptrend. So I think a pullback to that rising 20-day moving average would be very interesting on VRX. And then the last individual stock that I had before we get into the setups is CRNT. And this company announced that they had a new order, 66 million in orders, and it'll start shipping in December. And the thing that I like, and I know, Erin, you and I were talking about this one before the show, but the thing I like is all of a sudden we're starting to see a lot more volume come in. And on the last selling, this last gap down, this could have been some kind of capitulatory drop and maybe exhaustive selling off of this downtrend and a breakout above 220, 225 on this stock. It's a little company, but technical traders certainly might want to keep an eye on it. What did you think of this one?
Yeah, I was looking at the same thing. I got a PMO buy. Actually, I'm just going to share the screen because it's pretty easy to do and easier for me to talk. Okay. Yeah, I was looking at too that cup handle, came back down, tested that 20. I got the PMO buy signal though late November. So we were already getting some clues that there was some momentum building here. And yeah, I really like this. I would watch that 220 level and see if we can't get a close above that. It is poised very well. Actually, it looks like a decent Monday setup, but I didn't pick it, so
you can't have that one.
No, and I think I looked at the weekly chart on this one too, and I think it still looks pretty good here. And look at that, PMO is turned up in oversold territory near term. Could get all the way down to 20. We've seen that minus 20, and positive. But I think this is a great spot. And yeah, look at the OBV volume popping up there.
Yeah, and I would just say, we just do this stuff for educational purposes. If you're going to get into any of these stocks, please do due diligence and check these things out. This is a small company, and there's obviously a lot of inherent risk in these smaller companies, but it does look interesting, and there was news out there, so I just wanted to mention it. But yeah, it does look good from your perspective too, it seems like, on the PMO.
Absolutely.
All right. Well, we're going to go into the setups. And the first thing I'm going to say is here's a disclaimer. And I mentioned this last week. I don't want Greg's pick from last week.
That's right. Yeah. For those of you who don't know, Tom was not with us on Monday, and Greg filled in nicely. So Greg picked Shopify for Tom. And the very next day when I told him, he says, well, I don't want that. so we'll look at how Greg did. We won't nail you with that pick because it really wasn't yours. And you did say pretty much right out the gate you didn't want it.
Yeah, I didn't like that one, and I'm just giving Greg a hard time. Greg's a good friend. And he actually, the last time he came on, if you remember, I think he gave a resources stock as a Monday setup, and that thing absolutely blew ours away. So, sometimes you're the king, and sometimes you're not. And so this is not an easy game, but
the windshield one.
Yeah, and the one thing that we all talk about is even if you have a stock that doesn't do well, you want to make sure you keep your stops in play. That's the key, and I think that's a lesson learned too with SHOP.
Yes, absolutely. So I had PARR. Let's see. Let me get my notes out here. I'll let you do the checking, and I'll put it in the recap as to how we all did here.
All right. Well, PARR right now is at 2066, and I think you said you put it out at 2040.
Yeah.
That's a winner.
Mm-hmm.
Especially as volatile as the market was last week, any kind of strength, any kind of a gain is a good gain, in my opinion.
Yeah.
But, yeah, that one looks good and continues to trade above its 20-day. It's gone down and tested it a couple of times in the past, I don't know, 3 or 4 trading days.
Yeah.
And that continues to hold. So I think that, continues to look pretty bullish to me.
Mm-hmm.
But
So
good
not a
pick.
bad one. And then Shopify, which I think, what did I give you the? I gave you the amount there. It was
14.97.
Yeah.
And of course, let me just preface this: anybody who's holding any of these high flyers, that had done really well in 2017, most of those stocks were just thrown away last week. I mean, no one wanted any of them, and I think Shopify kind of fit that bill. So it's down. It was down to 97.85. So it's had a rough week, but it is actually getting fairly close to some good support in
Yeah,
the.
actually. Yeah, that looks decent. I really don't like that PMO setup in the scooter though.
Yeah.
I think you're right. It's just that area of the market nobody's real interested in right now.
All right, so that leads us to this week because you're only as good as your last pick. So
Yeah.
what do you have for setups this week?
All right. So let's see here. These were the list. I ended up with quite a few, and I thought it was very interesting. I actually, I get this from my scan, and it just pulls up whatever. I found it interesting that I got a lot of insurance companies. I actually took 2 out of the list that I had, so I thought that was kind of interesting.
Mm-hmm.
So anyway, I honestly haven't picked which one yet.
Uh-oh.
So I'll go through very quickly. This is Mantech International, MANT, and it came up on my scan. It's had a rising PM over the last 3 days, and it's got a nice configuration as far as the EMAs. Nice breakout here. But like I always say for Monday setup, since it is sort of an edutainment sort of segment, I like to pick something that I think will do something in 1 week. This one could. I like the breakout. I think it looks pretty good, but that's not going to be my pick. Let's see, American Waterworks. I think this one's come up on my scans before. I like this one, but I'm a little concerned. When I called it up earlier, the PMO was rising nicely, and now the PMO is starting to flatten out a little bit. But I think by bringing price back down to this area of support, that actually could be a good pick. So that's still on my list. I'm thinking I might go with a transport, though. CF Industries, I think, looks pretty good. We don't have the PMO buy signal yet, which is usually what I like. I like to get in there just before, try and get that early momentum swing. Got that breakout, and it has pulled back. So, I think that has some pretty good possibilities here because it's already getting that pullback toward this area of what I'm considering support at these highs from was 2 weeks ago, last week. But I don't think I'm going to pick that one. And Chubb was another one I got. I think this one's interesting, but again, that PMO is starting to flatten out. So I don't think that will be my pick. But I did want to show you these just so you can see what came up and what looks interesting. Johnson & Johnson, I think looks really nice. But it's so close to overhead resistance, so I'm not going to pick it. But I think it's shaping up nicely. We've got that beautiful PMO buy signal getting ready to come in. And what you'll notice with Johnson & Johnson is you don't get a lot of jiggle twitching, whipsaw PMO signals. Usually when those signals come in, they're clean and they're fairly accurate. So I like seeing this clean PMO buy signal coming up. To me, it suggests we probably will see a breakout above that overhead resistance, but I'm not picking it.
I was the catalyst for J&J turning back up because I got stopped out on my trade.
Oh, there you are.
Around 138 or so. So that one, that's why that one's going up now.
Yeah, actually, I think I'm going to go with MetLife. And I'm going to show you the other insurance one. And mainly because I really like the fact, we had that rounded bottom and then it came down and tested that 50 like yesterday or Friday, all the way down. And now it's popped back up. So I feel like that's that pullback, you're always waiting for, so it's broken out and now it's pulling back somewhat to that $54 range. So I think I'm going to go with MetLife, but I do have one more. So MetLife at 53.91.
I like your pick.
Oh, good. Thank you.
Yeah, well, I like the financials, and I feel like we're going to get a rate increase next week with the FOMC announcement. And I think heading into that, we could see our yields continue moving higher. And of course, that usually works out really well for financials, especially banks and life insurance companies.
Yep. And Travelers was the other one that came up. And I think this one looks pretty good too. But again, for edutainment value, for a 1 week setup, I'm going to go with MetLife because this one's already had that pullback. There's still plenty of upside potential here, but I think for the purposes of a Monday setup, I'm going to go with MetLife.
All right. Is that all of them, or did you have?
That's it. I know that was it. I think, did I show you PAR? What happened to it last week? I mean, I have the
Go ahead and pull it up.
chart here. So I picked it, right back here. We were forming this flag. So I thought that looked good. And we had just gotten that PMO crossover buy, or it was really close to getting that buy. I can't remember which one, but we got the breakout from that flag and it is heading back up. So I still think I think we talked about it. I think this one's still a pretty good hold. So.
Okay, cool. All right. What did you say the price was on MetLife?
Oh, well, let's go look. Because I don't remember.
Yeah, I didn't write it down. I should have got it down.
53.87 is what we'll go with.
All right.
Which is nice. It's on the low for the day. That again, edutainment value of getting a good setup pick. I think that works out.
That does work out. All right. I'm going to give you mine before we bring Mr. Hopkins in. So let's see what we got here. Well, the first thing I'll show you is the one I put into my blog article today, which was Google. And I know Google, many of these stocks are getting hammered. But what I was pointing out here was just this range of support that I look for. Maybe we get some kind of a turnaround on Google between maybe 990 and 1010. And we had closed last week at 1025. So if you pull this up, really nice feature of the blogs here at Stock Charts. If you're reading through an article and you see a chart, you want to get that updated, just click on that chart and it brings it up fully annotated, but with the update in price. So you can see now today, we are down another $10 on Google. So we're hitting the top of this range. I am not going to go with Google, even though I should. I like some others. I think this is a good one. But I think maybe we'll head toward the bottom of the range first, and I don't really want to ride it down before back up. So I'm going to go ahead and pass on this one. But let's see. I had a bunch of other ones. I'm going to go through them quickly. And actually, I have to tell you, when I was going through my scan of my strong earnings chart list, and what I do is I like to look for stocks in that chart list that have an RSI between about 40 and 50. When I was pulling them up, I felt like I had just gone out for Halloween and I just gotten home with a pillow full of candy, like emptied it on the table. When you're a kid and you're going through and you're all excited about finding the different, because that's what it looked like to me when I was pulling up the scan. But the next one is Team Atlassian Corp. So it's TEAM. Let's pull this one up. This one is coming back down the top of gap support. This was the earnings related gap up. And I always like the top of gap support. A reversing candle today, I think, would be really interesting on this one. If we could get back up and close over, say, 46. If we don't, we finish where we are here. Maybe we'll go back down toward that tail. So I wouldn't be a buyer of it if it continues to pull back. But a reversal on the 50-day and moving back up above that 46 area where we've been holding as price support, and that also is the top of that gap support. I think that one could be really interesting. ACLS. On ACLS, this is another one I'm kind of watching to see if we get a reversing candle. We got one on Friday with that long tail, and if we could do it again, get back up to the 50-day. Again, here's the top of gap support, and you had prior price support maybe around 29 or so. So 29 to 30 looks like pretty good support area, but I'd like to get a reversal. So I'm kind of watching this one for now. This one is not the pick for me. Blackstone. Now, I did think about Blackstone because I like this move getting back up above the 20, breaking this downtrend. You can see how we've been failing at the 20, and today's volume starting to pick up as well. So I actually think that this longer term support is holding, and on the more recent low down here, or at least the attempt to move at a new low. You can see that the MACD is starting to turn up. So not technically a positive divergence, but starting to give that feel of one. And I think a close back above the 20-day on Blackstone would be very strong. And that one I really considered, and I'm not going to say I'm not picking it, but I don't think I'm going to. Let's keep going. GNRC gapped up with earnings, and look at that big bearish engulfing candle. But there was the anticipation of their earnings report was just off the charts. I mean, this was a huge move. This is one of those buy on rumor. And then when they came out with that awesome earnings report, it's been a sell on news. I think we're setting up in a cup here. So I think the GNRC looks pretty good, but it did hit this resistance area around 50, and it's kind of pulled back off of it. So it's one I'm keeping a really close eye on, but I'm going to pass on it for now. GM, this was one that I liked before. I think we're probably building in some sort of like a symmetrical triangle here. So I like the bullish pattern it's setting up. Too early to do anything with that one just yet. KRA, top of gap support with earnings. Again, $46 here looks pretty interesting, but I'm going to pass. PANW. And by the way, I didn't do my Monday setups on my chart list like I normally do as part of my blog. I'll try to get that out later this afternoon. I'll have many of these charts on there annotated. PANW, I think, looks kind of interesting. After moving up to a 157.5 with earnings recently, it's pulled all the way back down here to fill the gap around 142.50. I think PANW looks pretty interesting. And I'm going to pull up one more before I give you my pick. Square, I think, has been getting absolutely hammered. The stock was almost $50. Look at this parabolic move to the upside, and you can see a lot of heavy volume. That's panic from those buying at the top. I think this one's going to actually begin to settle down. I'm looking for it to settle down, and if it can do that around the 50-day, maybe $35.5, $36. This is one that if it were to break down below the 50 intraday and then come storming back and we get some kind of reversing candle on the 50, I would really like that. So I'm kind of watching Square with a lot of interest because it has been up to 50 recently, and that kind of a reversing candle, we could see a quick 10-20% move on Square. So that's one I'm kind of keeping an eye on. But the one I'm going with, and I have to tell you, this is a little scary for me to even pull it up because I bought it 10 minutes before the show started.
Oh.
Because it was right down near support. I think I mentioned this one as an earnings spotlight recently. KLIC, and it is right about where I bought it, actually. It was starting to rally right before the show started. Now it's back down. But yeah, this is one that just, it shot up with earnings. This was, it traded just about 23.70 or so. It went up to 28.50, closed at 28.50. And look at the volume that came in that day. A lot of accumulation. Yes, it's been pulling back, but I think that, again, this was one that was really building up heading into earnings. Great reaction. So I think this was all buying on rumor. And then the news came out, everybody jumped in, and I think now we're getting that sell on news. And now we're at gap support. And notice the 50-day moving average coming up from underneath. And also I could annotate this going across. But you can see the prior price resistance, which came in at about $23. That now becomes support. So I think there's a lot, when you consider that the potential reward would be back up here at 28.50. I think this one, the reward to risk looks really good. So I'm going to go with KLIC as my pick, and it is currently 23.70.
All right. And I didn't write down mine. MetLife was
53.87.
53.87. There we go.
Yep. And I know we went a little bit long here, but I do want to bring Mr. Hopkins in. So without further ado, this earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides a unique stock trading service that provides its members with high reward to risk trading candidates. Unlike other trading services, earningsbeats.com focuses on companies that combine both solid fundamentals and strong technical charts to best manage risk. If you're looking for a trading service that utilizes patience, trading experience, and discipline to help you navigate the stock market, go to earningsbeats.com for a trial membership. Earningsbeats.com, better timing, better trades. Welcome back to the show, Mr. Hopkins. How are you doing today?
I'm doing good, Tom. How about you?
I am doing great. And I tell you what, before we go anywhere, I was pretty excited because I get questions all the time about sharing my strong earnings chart list.
Yep.
And I'm very reluctant to do so for a couple of reasons. Number one, it takes me a long time to put it together. It's a lot of work.
Yep.
And I don't want to, just give out that kind of thing for free. And I also know, having worked at Earnings Beats, that's exactly what you all do. So I don't really give it away, knowing that you come in here and help us out.
Sure.
You do. But anyway, I read your article on Saturday in Chart Watchers, and you have a special, and you're offering to give away this chart list. And that's why I want to mention it, because a lot of folks have asked me.
Yep.
And so I don't know if you want to talk about that along with some other stocks, but what do you got going?
Yeah, I do. First of all, you mentioned Chart Watchers. I got to tell you something. Anybody listening, I imagine most people get that, but if for some reason you're not getting it, you have to sign up for it. It's a free newsletter, comes out every 2 weeks. It's got an all-star lineup, includes John Murphy, Greg Schnell, yourself, Erin, Arthur Hill. I contribute as well. And boy, it is like having, this amazing newsletter available to you from such experienced people. And it's a great way to communicate to people out there who are trading and looking for ways to get educated. And you mentioned my article. I was really happy to be able to present it, and I'll give you the title of it in case somebody wants to go read it. It's here's the only chart list you'll ever need, and the 5 keys to trading success. And I'm not going to go through all the 5 keys. You can see that in the article, but suffice it to say, Tom, that what we're all about at Earnings Beats is zeroing in on the best of the best. And these would be stocks that beat bottom and top line earnings expectations. And then if you can match those with strong charts and be patient along the way, you're going to be astounded at the kind of results that you get. And it all starts by scanning and looking for these companies that beat earnings expectations and compiling them, and Tom putting them into a list. And it's what you refer to as a chart list. We call it a candidate tracker, but it comes from our chart list. And we're getting ready to update our chart list with over 275 stocks that beat earnings expectations. And what you can do is, if you have a chart list that's ready, you can go in through stock charts. You have to be a stock charts member for that. Go in and tell it what you want to see. For example, let's say that you're a big moving average person and you showed a couple of stocks. You showed that KLIC. I'll be looking at that when we're done here, by the way. KLIC, come right down to a key moving average. It's oversold. That is the kind of stock you want to look for, and you can develop your criteria in this chart list.
Well, you can probably get a little cheaper since I bought it.
Well, that's what I was figuring. Once you said that, I said I'm for sure going to get it cheaper.
Yeah, going to wait a little bit.
Yeah. But anyways, in addition, so you set your chart list up, which is what we've done, and I'll talk about how people can get access to it. And then what you do, Tom, is we call it stock. You're patient. You want to wait for a high reward to risk, and I can prove to you how the results, have proven this whole notion of being patient and waiting for something to come down to key support, where you can start looking at reward to risks of 3, 4, and 5 to 1. We just did an analysis of stocks. We went all the way back to April, but I'm just looking at recently because people like to know what happened recently. We had 17 stocks that were trade alerts to members. They're now what I call closed trades. And the amazing thing about these are stocks we put out to alerts to our members with entry levels, support, price target. And I'm sorry, go ahead.
No, I didn't say anything.
Okay, so we had 17 of these in the last 60 days. The amazing thing is we had 9 winners, and 8 of them didn't make it. They were losers. But the most important part of it was the winners, the 9 winners, produced an average return of 8.13%, and the 8 losers resulted in an average loss of 1.9%. So if you take that and you look at this from a risk-adjusted perspective, it absolutely clobbers the S&P. And the whole secret to this thing, I've call it our secret sauce. The whole secret sauce here is that you are patient and wait for the right entry. So if something goes against you, it's close to a key support, you can get out quickly and you don't think twice about it. You just exit. And then you also take your profits. You hit that price target to get close to it. You're going to take the price. You're going to take the profits on that as well. And if you look at that article and you follow these 5 steps that are, I'll call them easy, but they're not, but they're very informative, to look at. I think it can greatly improve results. And what I did is, if you go to the Earnings Beats website, you'll see at the top we have a holiday special. That's what you mentioned before.
Yeah, I think you had that in your article. So anybody
it's in the article too.
Yeah,
it's in the right there. Yep. Okay. And you can click on there, and if you get involved, you're going to get this chart list with over 275 stocks. It'll be totally up and ready to go in the next day or two. It's going to be awesome. And these are the stocks, all of them. Every single one has beaten earnings expectations. And this, if you want to, this is a great way to start, because it takes a lot of work to put a chart list together. But once you get one established, then you can build on it and you can put your criteria in and really make it work for you, Tom. So it's something, no matter if you sign up for this or not, read the article, because if you follow these 5 things, I think it's going to help you a lot.
All right. Well, first of all, that's awesome. I mean, I had read through your article. I thought it was a great article. And even when I clicked on the blogs there, you can see that it was the most popular article. So there's no doubt that there's a lot of really good information in there.
Mm-hmm.
But, with this market, I mean, we're seeing a lot of rotation. And of course, technology stocks are getting absolutely hammered, or they have been up, maybe the last 5 or 6 trading days. So is there any stock or a couple of stocks maybe that you're looking at, maybe your chart of the week? I know that we've talked about. I mean, is there anything you want to share here today?
The chart of the week is VRSK. And you can get that, by the way, going to the website. Mm-hmm. And you'll see that I'm actually targeting for this to come down lower. I'd like to get it, closer to the 20-day.
Mm-hmm.
Okay, look at that nice move it made, and it just kept going up. It got overbought. You got the little mountains, blue mountains down below.
Mm-hmm.
Let's wait for this thing to pull back closer to the 20-day. That's where I want to get involved. Then I'm going to set a very tight stop. If that thing closes below the 20, I might get out.
Mm-hmm.
But I think if the market, the market's a little bit overbought here in certain sectors, but I think this one in particular, if you're patient, let it pull back, I think it could revisit that high again, and you're going to end up with 3 to 4 to 1. So
Mm-hmm.
that is one that I like a lot. The one we put out today was IMAX.
Oh, okay. You got one?
IMAX went out this morning, and put that one out to our members at 2402. Okay. What I liked is, look what happened last week in the flash crash.
Yep.
Then it came back and retested that, but it held a 50. Okay.
Mm-hmm.
And I said, this is, I think, a good place to get involved, because I got a second entry down.
I just lost you.
Oh,
there you go.
Are you there?
Yeah. No,
I got a second entry at 23.45 to average down in case it pulls back.
Mm-hmm.
And then I have a stop of a close below the 50.
Mm-hmm.
So you can see, the reward to risk is high.
Mm-hmm.
And if it goes against you, if it closes below the 50, we don't think twice. You can sit there and you can curse and say, darn it, it didn't work and I don't like this. That doesn't matter. You got to just, it's why the risk-adjusted returns have been so solid for our members, because you're being disciplined. You're being disciplined, number one, in waiting for the right entry levels. Number two, you're going to put that stop in place that you're going to honor. And if you get the profits, you're not going to get greedy and say, oh, this thing could go higher and higher. You take your profits. Those are the really key ingredients here. And we've been doing this a while, Tom. It works.
Yeah. And I know, from my perspective, and I talk about this all the time, I don't use technical analysis to try to guarantee me a certain result. I'm not looking to be right 100% of the time. I use it to manage risk. And so I think what you're talking about is, waiting for entry instead of chasing these stocks when they're everybody else wants to jump on board. You simply wait for one of these reversals, come back down to a key support level so that you take less risk if it doesn't work out. And then if it does, continue moving higher, which many of these stocks do when you're in a sustained bull market, then you can benefit from the upside. So the patience makes a lot of sense. And I'm assuming with that many stocks on your candidate tracker, that you've probably found that the earnings season this past quarter was unbelievably strong.
Unbelievably strong. And again, here's the other thing I find. I find that the stocks that we generally put out as trade alerts to our members, it's not unusual for those to come out a couple weeks after the earnings have actually been posted, maybe even longer. I mean, it's possible that we could have one out that goes out within a day or two of earnings, but not likely, because it's almost uncanny. Once in a while you have a stock that just goes parabolic and never comes down, but they will come down at some point. Right. So if the whole thing is patience. What if it takes you 2 weeks or 3 weeks or 4 weeks from the earnings date? It doesn't matter.
Well, I think too, the whole idea is even if it doesn't come down and continue going higher, you got a lot of other companies to look at. So, the whole idea is to get out of the habit of chasing stocks after, something's happened and the stock's gone up, to 8, 10, 15, 25% or whatever. And you see those blue mountains at the bottom where a stock gets really overbought. That's the wrong time, in my opinion, anyway, to be jumping in. I would much prefer see these pullbacks. So I agree with you.
I agree.
All right,
good.
We're gonna have to get running, but I do appreciate you coming in. I definitely encourage everyone to check out Chart Watchers, all of the articles, but in particular, I think if you trade short term, I think some of the trading steps or keys that you put in your article were spot on. At least
I appreciate it.
I look at it. But anyhow, great talking to you again.
Okay,
we'll have you back on here next week.
Have a great week. Bye bye.
All right, thanks, John. And there he goes, John Hopkins from earningsbeats.com. Erin, that's, when we do these trade setups, that's one of the things we talk about all the time when we're doing our Monday setups is that we're trying to figure out when these stocks make their breakout. You like to get that PMO, but you always follow it down below with some key area that you like for that stock to hold as support, to justify that trade. And, my style is a little bit different, but still the one common denominator is that we're both looking to make sure that the support area that we're looking at holds in order to make that a viable trade. So it's always good to get that reminder from John when he comes in here.
Yeah, it was an excellent article. I've learned a lot from the two of you, honestly, about the short-term trading. I've not been a big short-term trader. It's just not my bag, as they say. But I'm getting a lot more interested in it, and just reading John, talking to you every day when we do our show, lots to learn. I'm learning. I know everybody's talking about how they learn, but I must say I learned quite a bit from the two of you, and I appreciate it.
Well, I think too that these principles, even though we talk about it in a short-term context, these principles really relate even to a much bigger picture and longer term. Arthur talks about the trend following. As long as the trend is up, you stick with it, and he's kind of, I guess, between the two of us, because I think he likes to get in its support and so forth. But at the same time, I think he tends to give it a little bit more time, a little bit more room and space to the downside, and watching these stocks or, industry groups, sectors, whatever, trend to the upside. But he follows that trend. And if you're a longer term investor or trader and you see that trend remain in play, to me, the principles are similar. You just give it more room to the downside, and you probably have a target that's much higher. But, it still comes down, technical analysis to me still comes down to navigating risk versus the return that you're looking for.
Absolutely. And on Friday, I'll be talking a lot about trend following. And I know Tushar, who's coming in Wednesday, is going to talk about his trend meter. So, but the whole point of the decision point trend models is to, stay the course if you're in a good uptrend. And then there's lots of other information you can apply, but that's the basic.
Yep. I know you've got a DP update coming up for everybody. Yes. And why don't we jump into the 10 in 10?
Absolutely. I think that's a wise decision. All right. First one up is going to be Visa.
All right. Well, the first thing that really just jumps out at me on Visa, and I didn't cheat this time, waited my turn to annotate here, but you can see as it moved up last time, the most recent high. Notice how the 20-day moving average has been great support so long as the MACD kept rising. But on this last move to the upside, you can see the MACD was very weak. And then we came through with this massive downside move. That's definitely a bearish engulfing candle, very heavy volume. Couldn't hold on to the breakout with a negative divergence. That kind of sets the stock up for some sideways consolidation. I think we're going to see it settle down and eventually turn back to the upside. But I think a key area is going to be down around that 106, 106.50 area. We got down close to that earlier today, 106.97. So I'm looking for Visa just to sideways consolidate. I still think the longer term picture looks good here.
Okay. Let's see. The next one I have for you is Twitter, TWTR.
All right, TWTR. Another one that, negative divergence. I wouldn't be surprised to see a little bit more consolidation. I like the fact that it broke out with some good volume recently, and it's trying to hold that support level, it looks like, or close, at least the second attempt. We failed on the first one. But notice when we had the huge gap up and we kept going higher on very heavy volume, the top of gap support held on the pullback. So this is a perfect example of not chasing. When the news comes out, it just goes straight up, heavy volume. Look at the blue mountains start to appear here. And then a week later, maybe a little more than a week, it comes all the way back down, hits that price support, moving average, 20-day gap support before it makes another push to the upside. I think this zone right in here is probably good entry into Twitter. We're testing the top end of it right now, but with, well, maybe there isn't a negative divergence. I was thinking maybe higher prices here, but the MACD actually looks like it's a little higher. So this very easily could turn from this top area of support. But I would say 19 and a quarter to 20 and a half would seem to be a pretty good area to build a position in Twitter. And then a close maybe down below 19 would really make me nervous.
Okay. Let's see. You've been asked a lot about biotechs and if you're still happy about them, but in particular, how about BIIB?
Yeah, I own this one, so this will be a good look for me as well. I like what's going on so far. It's not, healthcare really isn't participating as much today in the overall market, but I do think healthcare still looks good. It's just not nearly as strong as financials, industrials, the consumer discretionary space, or maybe even materials. But as money rotates away from technology, I think, healthcare is starting to get some of it. And I do think that biotech are starting to show signs of turning back to the upside. So for me on BIIB, one of the things I'm watching very closely is the rising 20-day moving average. So if this truly is beginning to strengthen again and we're getting momentum to turn back up, then this rising 20-day moving average should hold. And so far, it's been holding. The last couple of days, we've gone down, we've tested it in bullish fashion. We bounced off of it. So I would continue to look for that.
All right. Let's see. The next one I have for you is Microsoft, MSFT. Now, I noticed you had a lot of NASDAQ stocks and like the Monday setup. So as far as the NASDAQ and techs go, you're thinking we're about ready to bottom here, or?
Well, I don't know if I'm going to say I'm ready to bottom or see a bottom. I think that the reward to risk is getting better as these stocks sell off. I think the fact that Microsoft up until today had been trying, holding up near its closing high, I think suggests that we're seeing some nice relative strength in Mr. Softy, like I like to call him. Doesn't that look like MSFT? Doesn't that look like Mr. Softy?
That's an East Coast thing, but I actually know what it is.
So Mr. Softy actually is doing pretty well. You can see the volume last couple of days on the hollow candles was strong. I think this is probably presenting an opportunity. Do we hold at 82 or do we start to make a move down? I think that depends a little bit on the overall group. And we still have that negative divergence on the XLK that I showed earlier. So, we got to give these guys a little bit of room. Some of these companies that have had such huge moves to the upside, you just got to put it in perspective and realize they're going to pull back. They're going to have some of these scary pullbacks from time to time. And I think we're in the midst of one. So I like Microsoft, but trying to decide whether it stops here at 82 or whether we move back down maybe to 78.5 to 79. I'm not quite sure, but I would use this zone as an area to accumulate Microsoft.
Mm-hmm. All right. since we're talking about interesting symbols, WTW, which is Weight Watchers. And I don't know, as a Californian, I think, what the what?
Uh, there you go. Yeah, I think I still like Weight Watchers. I think I've had this one as a setup before. It's struggling, but I think the gap up there with the heavy volume was nice, and I believe I've looked at this one in the past. And the key area for me is just the recent support. So you can see on this breakout, heavy volume above the prior high. Maybe we could even go there because that was the breakout level. So I'm going to say between maybe 39.5 and 41 is really good support. At some point down the road, I'd ultimately be looking for a move back up to 50 or maybe above. So I think the reward to risk as you get down closer to this 39.5, 40 area really starts to turn in your favor as a long, because if it breaks down, I don't want to hold it down to the bottom of gap support. I'm not going to hold it to 32.5. This is an area that for me would be where I would, want to draw the line to the downside. But I do think it has a decent chance, perhaps maybe to turn back up, put in a cup. And I would be looking maybe for a target around $50.
All right. Next one I have is Merck, MRK. I mean, my PMO has got a really nice, clean, oversold buy signal that came in at the end of November. I don't know, though. That resistance area is a little concerning.
Yeah, I'd be real concerned if today it went back down and closed below the 20-day and it left a tail up above the 20 and then goes back down and fails to hold it. But on the most recent low, you can see a positive divergence. And that tells me we're probably going to get a 50-day test. And then we'll see where we go from there. So I would expect that 50-day will continue to drop. And we've got some overhead gap resistance that I think we're going to have to deal with at about 58.25 or so. So I actually look for prices to continue moving up while the 50-day drops. And we're going to meet somewhere in the middle probably. And at that point, I think Merck will tell us a little bit more whether or not we're going to get a breakout there or not.
All right. Kind of in that popular one, Alibaba, BABA. Interesting support level. The PMO is now definitely in the oversold territory, I have to say.
Yeah.
I don't like the looks of the rest of the indicators, though. And the PMO is still moving straight down. So, but I think it is interesting area of support, maybe.
Yeah, on BABA, I agree. I think that this is a key support level. I like the bounce so far. It looked like it was breaking down intraday and now coming back. The only concern I have is where we finish today, because while we are getting a nice move down below the prior low and reversing back up above, you can see the volume has been very heavy. Today's volume is extremely heavy. So a reversal would be great news, but further selling this afternoon in a breakdown would not be great news. And so that would be the next level, which is the top of this gap support over here. So I'm going to say a continuing reversal here would be bullish for BABA. But if we fail to hold 170 later this afternoon, I think we probably are going to move back down to about that 164 area.
All right. This is a smaller volume stock, but I love the name, Radware, RDWR.
Okay. Radware. Yeah, I tell you, I'd be watching. First of all, this doesn't trade a whole lot of volume, 160,000 today, but you can see already that's a fairly decent amount of volume. There are a lot of days in here where it doesn't trade anywhere near this kind of volume. So that would probably keep me from trading the stock. I prefer a little bit more liquidity, but I do like the increasing volume here and that huge bullish candle. But as we've continued moving up, volume's kind of dwindled, and you can see that MACD starting to roll over here. I think it's a little bit long in the tooth. Look at the blue mountains down here we talk about. That means the stock's been overbought for quite a while. I'm not bearish the stock. I'm actually bullish, but I'm just a little concerned that it's too risky to enter at this point. So I think maybe a move back down, and I'm going to say the most recent breakout, we got up to about 1970 or so, pulled back, and then we went through on increasing volume. So I think we could get a 20-day test at least. So I'm not ready to pull the trigger here. I'd have to continue to watch it.
Okay. Next one I have for you, Safe Bulkers Incorporated, SB.
All right. Well, this is, I think, is among those bulk shippers. I'm not positive, but I think that's what this is. I do see sideways consolidation, which I think is bullish. but this group in general has not been kind to me in my trading past, so I tend to stay away from them. Couple points here, though. You can see we had false breakouts. When I talk about a false breakout or a breakdown, that's where you get these tails where it looks like intraday we're making this big breakout and we fail to hold it. And look what happened to the stock after it did that. So I never like to see these false breakouts because that tells me that more likely than not, it maybe has reached a short-term top. And in this case, we pulled back. I think to the downside, the recent low here that was established is still in play. And if you want to keep it maybe a little closer, maybe you would say that the low that we saw mid-November. But I think it's just in the middle of the range. I'm not a big fan of this group, so I'm going to pass. But I would probably be watching 360 to the upside and maybe about $3 to the downside as your trading range.
All right, the next one, I've invested in this one. It's been pretty good for me. Not in it now, but BX, Blackstone Group.
Yeah, I talked about this one as possible setup. So I really like Blackstone. I like what it's doing. And I think this is the 10th one. So I think we'll wrap up with this one.
Oh, there you are.
But Blackstone, I like the move back above that 20-day moving average. I think if that holds, that's a very good sign. And one of the things I like about Blackstone is it's in the financial space. And financials, I believe, are one of the strongest areas to consider for trading right now. So the stock did pull back, and I know it was very scary here as it moved down below this prior low. But once again, look at the long tail, false breakdown, and then we rally back short term to hit the 20, come back down. Look at the long tail on Friday to test support. And now look at us today making the move back up again. I think that the MACD is starting to turn back up. I like the group. I like the breakout above the 20. If that holds, I would expect to see higher prices in the near term with Blackstone.
All right. And that concludes the 10 and 10 to 1.
Or 10 and 13 or 12 or whatever it was.
Yeah, something like that. All right. Well, I better do a market update, and then I do have some interesting decision point charts to show.
Okay. Sounds good.
All right. Let's get to where we need to be. All right. I did pull up the relative rotation graph just very quickly so everybody can see on a very short-term basis what the sectors are doing. So that'll give us a good idea of what we're looking at on our market summary. And as we can see, consumer staples is leading. I find it interesting to see, gold is traveling in that southwest direction, which is not what you want to see on these graphs. But look at financials and industrials. Not a surprise to see this beautiful northeast travel on these particular sectors. Good to see, and not a big surprise given what we're currently seeing in the markets. Let me go over to our candle glance, and we can get an update on what exactly is happening in this moment in time. And we can see that most of the major indexes, remember, we did get that gap up, but since then really have been kind of just, traveling sideways, consolidating, not really interested in setting new intraday highs. You can see the NASDAQ, we got into the negative, but it is bouncing and trying to make its way up into positive territory. Russell 2000, got the big move earlier in the day, but rather than consolidating, it's pretty much been dwindling. Still on the upside, though, currently at 1545.42 for the Russell 2000. We can see Wilshire 5000, very similar to the S&P 500, gap up, moving sideways. Treasury yields are up slightly, currently reading 23.90. The dollar gapped up and is moving sideways. I'll be showing you that in the decision point report more closely. Commodities gap down. We were seeing a consolidation, and now we're getting down here and setting new intraday lows for DBC commodities. And as far as oil, we did get the gap down. It is starting to pull back a little bit, but it hasn't reached intraday lows again just yet for USO. Gold gap down, moving sideways, consolidating. The VIX at this point is lower, currently reading at 1043, advances leading declines. And that, I think, is going to complete the last market update. And I think I'm going to go right into some decision point information.
Take it away.
All right, let's do this. I got to get to the right screen. All right, so every Friday, Carl does the decision point weekly wrap, and he goes over a lot of what I'm going to go over, but his view is a little bit more longer term than my views, because I'm riding more on a daily rather than a weekly basis like he is. So highly recommend you go check out the Decision Point blog, see what he's thinking about the markets in the intermediate term. If you want a horizon that's a little bit longer than what we usually cover, for example, on the show. So I'm going to first show you the SPY. This is what we use for our trend model signals, which I'm going to go over with y'all Friday. So you'll want to hear that. But when I turn in my signals to Timer Digest, I get them from the SPY. That's what we've just determined to use and have used over time as what we're looking at. And you can see I had annotated this rising trend channel, and we're just now starting to hit the top of it. Had that dip down and actually traveled below that rising bottoms trend line, but got back into this zone. We got the new PMO buy signal. I like the look of that. And then, of course, you want to see your EMAs with the slowest on the bottom, the fastest on the top. That tells you you're in a nice hot trend and you want to ride it. And so at this point, when I look at the SPY, I don't see any, I don't see anything that would have me worried about a deep decline or pullback. The PMO looks good. Look at the OBV is still doing pretty good here. And a scooter is now up into the hot zone. I mean, it's hard to be at all bearish right now when you're looking at the major markets here. But I do want to give you a look at the NASDAQ 100 because it has been suffering as of late. And I wanted you to see how the PMO is stacking up right now. Here, I want to get this so you can see. So this is NASDAQ 100. I'm actually seeing kind of a head and shoulders even trying to come together here with a left shoulder, head, and possibly a right shoulder over here. But, the main thing is I've got this sell signal on the PMO, and you can see how the PMO topped and is curled over and is moving lower. This is a good area of support, though, at that 6,200 level. And it did hold up on Friday, even though we had a really deep decline. So, I mean, as much as I'm concerned about seeing technology not doing well, we have looked at and seen some sector rotation going on. And I think, as you were saying, Tom, seeing a very strong area of the market start to have some weakness and pull back, it does open up that RSI so that, you're not in those overbought territories. It's something you really do want to see. It gives you some better opportunities out there. And I think that's what we're getting ready to see in tech. But I don't think we're done with this decline. I think we're still going to struggle here with technology. And I base that really on what I'm seeing here with the PMO. So you can even see if you look at these two PMO tops, look at the negative divergence going on here. Pretty significant, I would have to say. All right, so that's the look at the NASDAQ. And then I'm going to show you the OEX. So remember this negative look on the PMO for the NASDAQ 100. We'll look at the PMO configuration on the S&P 100 for the same period of time. We've got almost a parabolic move here. Actually, I think you could call it a parabolic move on the S&P 100. Got that buy signal. Everything's looking good. So, when you make these comparisons, I think it's really interesting to see the PMO on the NASDAQ 100 and how it is just turning completely over like this, showing you that the momentum has not switched yet on technology. There's still some more time for that pullback. So I would be waiting a little longer on some of those technology opportunities. And let's see here. So I'm going to show you the mid-cap ETF IJH. And again, you can see mid-caps are doing quite well. And I'm going to show you that Russell 2000 ETF as well. But we've got the PMO buy signal. Again, this is a totally different look compared to the techs and the NASDAQ. So I think that's very interesting, when you get a market that is bifurcated like this and trying to figure out, where the strength is, where the weakness is, and where the opportunities lie. So at this point, I think technology is going to be where the opportunities lie, but we have to wait for it to move back further. IJH looking pretty good. That's a parabolic move as well, I would say. And when we look at IJR, which is the S&P 600, there we go. Another similar look. Look at these really nice, clean PMO buy signals. And now we've got IJR is in the hot zone. And I'm going to look at IWM. Russell 2000. And again, these really nice rallies, a little parabolic for my taste, but you know, when you're seeing a really great setup here with the PMO on a buy signal, not really much in the way of deceleration. Scooters now up into that hot zone. You can see when it's been in that zone, that's usually a good place to be. So good to see that up there in the hot zone. So that's Russell 2000. But now I want to go ahead and look at my indicators right now. And I'm going to start with the climactic indicators, our really short-term indicators, similar to your candlesticks, because it's a really short-term. We're talking a couple days. At least this is the way I read these particular indicators. And I think that it's pretty right on. I really love looking at the VIX. I invert it and I use, Bollinger Bands. And I invert it because when you get really high VIX readings, that typically means people are feeling very bearish. And when people, sentiment-wise, are feeling very bearish, you usually should expect some sort of an initiation after that, or a climactic move to the upside. And sure enough, we saw these weren't exactly climactic readings when we got that penetration of the VIX Bollinger Band on the bottom here. But that didn't matter. We still ended up getting that nice rally, that burst upward off of that penetration of the lower Bollinger Band. So I like to see these bands getting a little bit further apart, because I think when you watch when they get to the tops and bottoms of these bands, that's usually when we get some really good information in the very short term. So looking at our climactic indicators right now, we've got that rally move upward. I'm going to be watching to see what kind of what we see advances minus declines come in later today. I'll be interested to see if we're getting any kind of climactic readings there. But at this point, it looks good. We got that initiation, we got the rally. Now I'm kind of waiting to see what's going to happen next to give me some information. And those charts go final at the end of the day. So I need to wait for some of those readings to come in. As you'll notice, short-term indicators, same thing. We have to wait for the close of the market before these update, so you don't get an intraday look. But this has been really great. I've been really excited about my short-term indicators for quite some time. We had them turn up, got above the zero line. That's when I was getting really excited to see the move back above the zero line. And you can see very little hesitation coming off there with the Swenland trading oscillators. And they've continued to rise, and we're not overbought yet. So I think in the short term, I think there's still more room to move higher. And I have my intermediate term indicators down here. I'm going to show you the actual chart of those. But look at the nice undulation here on this bottom on the ITBM and the ITVM. And they're still rising nicely in conjunction with that short-term bottom on the Swenland trading oscillators. Super great setup. I did point this out to everybody in my Decision Point blog. So, that's what you want to see, are these short-term bottoms on these indicators. And then the bottoms come in on the intermediate term indicators. When you get those bottoms coinciding like that, you're usually going to see a pretty nice rally come out of that. So we're seeing some hesitation, granted, but you get a little bit of twitch. I think there's still some more upside in the short term based on these charts. And look at my intermediate term indicators. Very, very pretty. Here we are. Look at these really nice troughs here. And we got the positive crossovers. And I think these indicators are really quite good for the intermediate term. I've marked bottoms in these indicators. And typically, you'll get the nice rally move off of those bottoms. I'd say this was a little bit weird because we had that was a really rough 2016 early on, I know that. But ultimately, once these bottoms did come in, you still came off with a nice rally. So really like to see this. We're just on the way up. We're not even near overbought territory yet. So I would say going into the end of the year, it still looks pretty good. And since I'm right now tied for first place for Market Timer of the Year with Timer Digest and sitting on an intermediate term trend model buy signal, I do hope to see that the signal pays off and we continue to see bullish move through the end of the year. And, you know, with Santa Claus rallies and all of that, everything's looking pretty good. My only concern right now, I would say, is the fact that, you know, the NASDAQ 100 has been struggling. All right, last thing, the big four, and then we can have our final thoughts. What I noted earlier in the last week is we did get this new intermediate term trend model sell signal on UUP. Didn't like to see that. Now, it's a sell signal because the negative crossover of the 20 and 50 occurred below the 200-day EMA. So as far as decision point analysis is concerned, once that 50 goes below the 200, you're in a bear market configuration. Bear market rules apply when this happens. So the idea is we got the buy signal back here with that 2050 positive crossover, and that's a straight up buy signal. But when that failed and came back down, now the 20 is below the 50, but it's also well below the 200-day EMA. So still should have bearish expectations right now as far as the dollar. And interestingly, you know, we had pointed out this really nice bullish reverse head and shoulders. And now I'm looking at it, and as we're coming out with this rally, now it looks like we're setting up a bearish head and shoulders with a left shoulder here ahead. We'll have to see if we can get a little bit of rally out of this. You know, the PMO is starting to try and hook up here a little bit, but I don't, if we get a little bit of rally, I think it would set up a nice head and shoulders pattern. I'm not feeling too good about the dollar right now. Looking at gold, however. All right. Lots of consolidation sideways, obviously. It's been in this trading range now for quite some time. I've been pretty much staunchly telling everybody I did not think that gold would get above 1,300 on this last PMO buy signal. And, you know, so far it's been right on. Look over here in the thumbnail, though, that 20-day EMA topping below the 50-day 50-day EMA. I think that's a really bad sign. You know, we were trying to get a nice buy signal off of this rally. The PMO was attempting, you know, to make a nice positive move, but you can see it wasn't a move like this where we get a nice momentum shift. We got the shift, but, you know, we ended up with mostly sideways consolidation. At this point, we now have a PMO that is topped, and it topped almost below the zero line. So I think the weakness in gold is going to finally win out. I think the weakness is going to win out. We're certainly going to test this 1265 area, but I am expecting, honestly, I'm expecting a breakdown below that 1265 area. Timing wise, not so sure, but looking at the PMO topping here, not liking it. Look down here as well. The scooter has fallen down into the basement. And as far as the premium discount information, I'm not seeing anything overly exciting there. So not much to comment with that. But, you know, we're sitting right in the middle of this trading channel. And I suspect we will certainly test the bottom of this trading channel. But I'm feeling pretty bearish about gold right now, given that 20-day EMA topping below the 50. And you can see that 5-day EMA is now about ready to cross below the 20. And that's going to give me a short-term trend model sell signal. So I'm not really a fan of gold right now. And we're almost out of time. So I'm going to look at USO and TLT. And as far as USO is concerned, I've been pointing out this negative divergence on the PMO tops versus the price tops. And that had me concerned after we got the pullback after that last top below. It came back below that area of what was resistance and turned into support. It didn't last very long, came back in. The PMO is not only in a negative divergence, but we also can see the drop, the PMO sell signal that recently came in. Now, the one thing, though, to note is that, you know, the trend is still pretty positive. Look at the margin between all of these EMAs. So it doesn't look that great when I'm looking at momentum in these price tops and PMO tops, but I think we already got that pullback at this point, and it stopped at the 20 and has started back up. So think there's some possibilities here right now for USO, and I'm going to take it down here just a bit lower. So this is oil, price of oil. And you can see we got that breakout over the overhead resistance area. We're sitting in the hot zone. On balance volume, as far as USO, is bottoms are trending up. So I think that we got the pullback here. The next line of defense here, at least for USO, is that this area of overhead resistance that matches up with these earlier highs from early 2017. And we made it above it, but immediately fell back. So I'm looking forward to get that to get above that area of overhead resistance. But given that the PMO has now gotten on a sell signal, I would think that we're going to get a pullback, probably back to that 20 once again before we get the move, the breakout move higher. Finally, TLT, and then we can end this thing. All right. I've been looking at a possible head and shoulders, kind of an intermediate term one, forming up here on TLT. And, it looked like the right shoulder was coming in. We didn't really get the pullback, though, on that shoulder, in my opinion. Not yet, anyway. But look at the PMO. I mean, I was ready for that negative crossover. I was feeling pretty bearish here about TLT. But now we've gotten that bounce above the signal line for the PMO. So we're still seeing a rise in the PMO to match this somewhat rising trend on TLT. Price is now above the 520, 50, and 200. So I'm going to be watching this area of overhead resistance. And given that PMO has switched direction, and that's happened since I wrote about TLT last, I'm seeing that. And I think that is very positive, especially with this nice rise here on the PMO, rising with these price bottoms too. I'm thinking we're probably going to see a breakout here above 127, but I don't think we're going to get past what would be the head in this particular head and shoulders pattern. We'll have to see if we get that pullback all the way down to form a true head and shoulders. But, things just aren't looking that negative when I look at the PMO. So that would be it for my decision point report. And I highly recommend that you go to the blogs page and you can find the decision point blog here. And there's your DP weekly wrap. Carl goes over much of what I just did on this, but with a more intermediate term view. And you should keep an eye out for the DP alerts when I write those. I do them about twice a week, and I do exactly what I just did for you right now, only I write it down. So you'll see the same indicator charts, et cetera, and you can keep an eye on them even before I give you your decision point report on Mondays. So that's all I got, Tom. And I know we're getting ready to close things up.
Yep. I got a couple quick things. There were some questions in the room, couple questions. We won't have time to get to all of them. But there was one question on time, TIME, talking about a possible island reversal. And what I would just suggest there is that Time and Meredith Corp, MDP, announced a merger recently. So I would not be looking for any kind of island reversal. I think probably you're going to see sideways consolidation for a while until that merger goes through. So anytime you get this, something that happens because of a merger or something out of the ordinary, I'd be careful on, I guess technically they could announce that the deal's not going to go through, and then maybe you do get that move to the downside. But I'd be careful reading too much in about that. Another question about what, how about the first test of a 50-day moving average? Would you buy on the test or await the close? I would just say that, you have to look at each case individually. I'm a big fan of buying on a 50-day test, assuming it's also hitting price support, maybe trend line support. And if a reversing candle prints, that would be more impressive for me and certainly more bullish. Say, you go below that moving average by quite a bit, and then you reverse back up and print a hammer right on the 50. So, you have to take each individual case. I would not just make a blanket statement that I would buy on a 50-day test. I think it, really, you have to look at the other technical signals as well. We just have a couple seconds here, though. Erin, any final thoughts?
Oh, gosh, I think I laid out quite a few final thoughts on my decision point report. But yeah, I'm kind of curious to see what happens with that NASDAQ PMO. I'm thinking it's just really interesting to see the difference between techs and the rest of the world right now, as far as the major markets and the S&P. I'm just curious how that PMO is going to, if we're going to finally see it turn up. I'm going to be watching that very closely. And of course, I'll let everybody know if we get any changes in signals for the NASDAQ.
Yep. I absolutely love this rotation that's taken place. I know it doesn't feel good if you're in technology stocks, but it certainly does feel good in the other areas where the money is rotating to. I think that's critical, even though we've been pulling back and it's been scary in technology and maybe some of the other high flying stocks. That money is not leaving the market. We're seeing it move into other areas, which is why we can continue to see the Dow and the S&P move higher. So I am still very bullish the action. I think probably sooner rather than later, we're going to get a pretty nice bounce in technology as well. So that's kind of what I'm looking for as we wrap up the show today. But of course, we will be back tomorrow as we are every day. I do want to thank everybody for joining us today. Please complete the survey as you exit the show. We love getting your feedback. We read every comment that comes back. And so if you have any suggestions for future shows, love to hear that as well. As a reminder, Market Watchers Live now airs 5 days a week from Monday through Friday from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back in here tomorrow. Happy trading.